All right, welcome. Today we're diving into a pretty fascinating case study from the market DNA model. We're going to be looking at copper, and specifically a cycle they've identified as copper_2_2. So let's jump right in. So here's our game plan for this one. First, we'll do a quick introduction to this specific copper cycle. Then we'll walk through the initial setup, phase one. After that, we'll cover the two key events that have happened so far. And finally, we'll wrap up with the cycle's current status and some really important disclaimers. So, what makes this particular case study stand out? Well, it's the path it took. It's a bit unusual. The cycle went from phase 1, then jumped all the way to phase 3, and only then came back to complete phase 2. Our job here is just to document exactly how that non-chronological sequence played out. Okay, let's start where it all began, phase 1. This is what we call the setup. It's basically the blueprint for the entire cycle, where all the initial numbers and the risk plan get locked in. Take a look at this. This chart is from February 17th, 2026. Think of it as our day one snapshot. It perfectly captures the market conditions right at the moment the cycle was identified and the phase 1 parameters were set. Now let's get into the nitty-gritty, the core numbers for this plan. The model flagged a primary entry at 5.7177 with a secondary entry at 5.5392. That gives us a mean entry point of 5.6284. The whole thing was set with a 32-day trapezoid time duration and a risk coefficient of 2. And what about managing risk? Well, the plan was based on a hypothetical $100,000 in capital. The absolute maximum drawdown allowed was set at 5%, which is $5,000. Based on those numbers and an expected low price, the calculated size for each of the two potential trades was 0.28. Now, you might be asking how that trade size is calculated. The documentation is very specific, so I'm going to read this for you word for word. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So, with the setup complete, 3 very clear price targets were on the map from day one. Target 1 was the mirror level at 575, target 2 was the N apex at 5.9415, and the final target, target 3, was the trapezoid top at 6.0825. Okay, now here's where things get really interesting. Following that alternative path we talked about, the first major event to actually happen was the completion of phase 3, when the price hit the N apex. And remember, this happened before phase 2. And here's the proof. This is the chart from March 10th, 2026. You can see it clear as day. The price has climbed up from that initial setup and made direct contact with that N level we just mentioned. And just to be precise, on that day, March 10th, the price hit 5.9415 on the nose. Reaching that predefined level officially marked the completion of this cycle's third phase. So after hitting that phase 3 target, where did the market go next? Well, it moved on to the next key event, mirror contact. And this milestone is what marks the completion of phase 2. Now, let's fast forward about a month to April 8th. As you can see on this chart, the price has actually reversed from that high at the N apex and traveled all the way back down to touch the lower boundary of the trapezoid structure. And the exact price? On April 8th, it hit 5.75. If you've been paying attention, you'll remember that was our target 1 from the very beginning. Making contact with that level officially completed phase 2 of the cycle. And that pretty much brings us up to speed. So let's talk about where things stand right now, and then of course, we'll go through some essential disclaimers. So, just to be crystal clear, as of this recording, with that mirror contact event now in the books, this cycle is officially documented as being in phase 2. Okay, before we sign off, it is absolutely crucial that we cover these points. Please remember, this is for documentation purposes only and is not in any way financial advice. The model prohibits the use of leverage above 10, and you should never, ever invest essential personal funds. This analysis is simply part of a public model documentation, and we're keeping the tone completely neutral. No predictions, no assumptions. And that wraps up our documentary look at the copper_22 cycle up to this point in time. For more case studies and information on the market DNA model, feel free to visit the website you see on your screen. Thanks for joining me.